India and China are two of the most populous countries in the world. In the last decade or so, China, which many people still call the world's factory, has actually slowly weaned its economy off of manufacturing and diversified into tech, with BATs leading the charge. That's Baidu, Alibaba, and Tencent. However, India, which is the third largest startup ecosystem in the world, raised $42 billion in 2021, which is the best year on record for Indian venture funding. Talking about valuations of single startups, India today has 4 decacorns. That's companies that have a valuation of more than $10 billion. And these companies are Flipkart, Byju's, Swiggy, and Nykaa. But how exactly do these two Asian giants compare? Let's find out. Flipkart, Byju's, Swiggy, and Nykaa. If we take all 4 of these companies and combine their valuations, they're actually still less valuable than China's single most valuable hetacorn, ByteDance, which is known for its flagship short video sharing app, TikTok, and is currently valued at a whopping $300 billion US. Moving on. Talking about investors' trust in the ecosystem, India has a much more open ecosystem when compared to China. Flipkart is owned by Walmart, but ByteDance's ownership isn't clear. Yes, they have raised upwards of $9 billion from investors, local and international, but how much control do these investors actually have over their China-based portfolio companies? It's hard to imagine international stakeholders voting against the desires and agenda of the CCP. Talking about protecting their local businesses, both India and China are pretty ahead on that. India, for example, has banned Chinese companies like TikTok and Shein. Thanks to protectionism, startups like Moj, MX Tarkatak, Chingari, and Josh have been able to thrive. China has also banned American companies like Facebook, Google, and Dropbox. Other American companies like Tesla, Apple, Starbucks, and Nike have a strong presence in China, but are also very careful to play by the CCP's rules. India, however, is ahead of China when it comes to growth in minting unicorns. The rate of growth among unicorns in India, 36% growth from 2019 to 2020, and over 100% growth in 2021. And if you look at China's growth, 8% growth in 2020 and just 14% growth in the year 2021. India is clearly ahead. And according to Inc. 42's The State of Indian Startup Ecosystem report, India will beat China to become number 2 in terms of total unicorns by the year 2025. When we talk about which sectors are dominant in both countries, most valued startups in India come from e-commerce, followed by fintech and SaaS. For China, the leading sectors are finance, internet, and logistics. In terms of where startups are coming from, in India, most of the companies with a valuation upwards of $1 billion are located in Bengaluru, followed by Delhi NCR and Mumbai. On the other hand, startups in China are located along the east coast, such as Beijing, Shanghai, and Shenzhen. Beijing is known for its booming artificial intelligence, big data, and fintech startups, and about 70% of the country's potential unicorns are located there. Standing up to Beijing is Bengaluru, which has a mix of sectors, ranging from e-commerce to fintech to agritech and EVs. When it comes to birth rate, China had implemented a strict one-child policy, which impacted its birth rate significantly. By contrast, India has a higher birth rate, with a total fertility rate, TFR, of around 16.949 births per 1,000 people, a 1.25% decline from 2022, while China's TFR is lower, at approximately 10.645 births per 1,000 people, a 2.36% decline from 2022. Now, let's talk about the GDP growth. China has been the world's fastest growing major economy for decades, with a GDP per capita of $12,720, a 0.81% increase from 2021. India, on the other hand, has also shown impressive growth, with a GDP per capita of $2,301.418, a significant increase when compared with a GDP of $1,971.654 in March 2021. When it comes to average income, China has generally had a higher income than India. This is partly due to its larger economy and the urbanization of its population. As of May 29, 2023, the average monthly salary in China is approximately 29,300 yuan, $4,214, which translates to an annual pay of around 351,600 yuan, or $49,200. Meanwhile, the average monthly salary in India is 27,200 Indian rupees per month, which translates to $331. This implies that half of the Indian population earns about 27,200 Indian rupees every month, which translates to an annual pay of $3,960. Both countries have diverse economies, but their economic structures differ. China has a strong manufacturing sector and is often referred to as the world's factory. India, on the other hand, has a robust services sector, including IT and software services. The services sector has been a driving force behind India's economic growth. In the past few years, however, focus has been shifting from China to India when it comes to growth. Previously, the Chinese Communist Party started a massive crackdown on tech giants, education, and entertainment firms in order to pursue the ideology of common prosperity, which seeks to narrow the stubborn wealth gap between the rich and the poor. These crackdowns by the government have already wiped out $1.5 trillion in market value last year and have left investors from around the world terrified of losing their multi-million-dollar investments. India, on the other hand, is slowly replacing China as the preferred destination for investment for these Western firms. China Plus One strategy, where the world is looking for another place for manufacturing, is also set to help India massively in coming years. India is being viewed as the next growth engine for the world's economy, and Indian government is also playing a key role in all of this. Its efforts towards erasing regulations, providing good infrastructure, and promoting entrepreneurship across the country through programs like Atmanirbhar Bharat, Gatishkati, and Startup India are starting to show results. When it comes to challenges and opportunities, both countries face issues like income inequality, environmental concerns, and the need for great development. India is mainly aiming towards boosting manufacturing and technology sectors. However, China is shifting toward a more consumption-driven economy. As you can see, India and China are economic giants with their unique strengths and challenges. India is gradually gaining traction in the global economy, while China continues to lead in several economic indicators. It will be fascinating to see how these two nations shape the future of Asia and the world. If you found this video insightful, don't forget to like and subscribe to our channel for more content. Do you think India's economy is ever going to surpass the economy of China? Let us know in the comments. Thanks for watching, and we'll see you in the next video.